got done reading an article about how car insurance is overtaking the car price. So the dealerships have been kind of dying off because the car dealer prices are getting higher and higher. They were rarer and rarer to get vehicles 2 years ago. Now looking at 2024 and 2025 going forward, the cars are just sitting on the lots. A lot of the vehicles aren't being purchased and people are slowing down on purchasing vehicles. Part of that isn't just because the cost of the cars have gone up, but it's also the cost of the insurance has skyrocketed. I recently just made a video, I'll link at the end here, that talks about the 30+% increase that we had the last few years and goes a little bit more in depth than that. But essentially the car insurance in general is going to cause a big rift in the automobile industry. Part of my career was in that industry at some of the worst times. Back in 2010, 2011, when nothing was happening. I literally sat in a chair, stared out the window and hoped a client would walk by. Knew it was time to leave when other employees started to cut each other out to get sales, and it's just not my thing. I'm not really that cutthroat guy. I'd rather inform you and put links like I have below that actually help and benefit you. Just not my style. I'm not really that used car sales type of person. I'm sorry for all my friends who are used car salesmen, by the way. You guys are usually good people. It just depends on who you're talking to. You've got to be aggressive, and that's a good thing and can be seen as a bad thing. It just is what it is. So what can we do to fix this problem? Because this is going to snowball into something even larger. Now, I've also made a video that talks about how the industry isn't slowing down with increases. If you're in states like Texas, states like Florida, states like California, you're even Pennsylvania, you're also seeing New York, you're also seeing Alabama and Louisiana. These main states, even a little bit of Michigan, are seeing what's called a holdback or a pre-bind pause is what we call it. And what that is it's insurance's way of saying, we'll still stay in this state, we'll still insure people, but we're going to put these roadblocks in that make it almost impossible for the average person to get a policy with us. That means only the perfect, squeaky clean person can join that company. On top of it, there's a higher cost to join those companies that are the higher tier companies. We call them A-rated. It's a company that rates them. It's AM Best rating. And usually those A-rated companies are going to have a little bit extra cost. Usually not a lot because they still have to be competitive to win, but they don't really want that type of business in certain states. In other states, they're just fine. Illinois, Virginia, Tennessee, all you guys are getting rate increases like crazy. They don't care that you join them. They just want you to pay the right price. And that's where we're seeing this sort of fall into this industry of auto purchases. So what can we expect going forward is the auto industry in the next probably 3 years is going to go almost at a flat line. You are going to have those people that still buy the cars and they just buy it without thinking, but you're going to have a lot more repossessions, and you're going to see a lot more repossessions in the next few years. Part of the economy is trying to pay for milk, let alone their car insurance, which both say they only went up 9%, but in all reality, we're looking 20 to 30, even 50% in some states. So how do you fix this as a consumer? There's a couple things you should think of. When you are buying a new vehicle or you're shopping for car insurance, you should work with somebody that you, one, trust, that's the most important, but two, try to work with someone that's independent. An independent agent can shop you across multiple companies. If you're the top 5% and know exactly what you need for car insurance, you know what your risks are, then you can start doing it yourself. You can hop online and go to every company, but at 9 times out of 10, it's more convenient and usually the same price just to have somebody else do it for you. On top of it, these agents have followed the industry, so they know the new discounts that have come out, the Teachers Association discounts, the credit union member discounts with some companies. They know whether you're going to have to sign documents and whether you're not going to have to sign documents. They know that even though this rule says X, Y, and Z, that if they call the underwriter, they'll approve X, Y, and Z in your scenario. So getting the right company fit isn't always just you doing the right process, because you just don't understand some parts of the industry that could save you hundreds of dollars, if not thousands of dollars, and still get you the company that you want to work with. If you are shopping for car insurance, I'll put a link in the description below where you can work with an independent agent. They'll shop across multiple companies for you. Once again, beyond that, you need to think of what can you do proactively for that. So if you plan on purchasing a vehicle right now, there's not a ton you can do. You can watch a video that I made on the discounts of car insurance. You can watch what's the best coverages. Find ways to cut and lean down that policy. Don't necessarily switch insurance if you've been with the company for 2.5 years. Wait until at least that 3-year mark so that when you go to the next company, you get that extra discount. That's, again, once the advice that you're going to get from an agent, because you're going to get what's called a loyalty discount. Other companies will give you that discount to get your business. but you have to have been with somebody for 3 to 5 years. The other questions is what do I have to have deductible wise? If I can put $1,000 away, it might make more sense to put $1,000 deductible on the collision so that it lowers the cost of the insurance. You've got money in the bank to pay for it if it happens, and everybody's having a better policy. Now, proactively, if you're thinking, well, maybe it isn't the time for me to buy a car. Honestly, a year from now will probably be a really good time to purchase a vehicle, maybe a year and a half. Part of it is I believe that there's going to be an overstock of vehicles that the pricing will come down on the vehicle, but now when you're ready, you can pay for it. On top of, if you plan ahead, you can work on your credit, work on your insurance score, work on clearing off any claims or tickets that are just kind of lingering about to fall off. Pull a report on yourself and find out what exactly is your history look like. For those of you that don't know, there's a company called LexisNexis, and that's where all of these insurance companies get their data, at least all the ones I know. And you can go and pay 20 some odd dollars, I believe it the cost is, and you can pull your own data. You can see your insurance score, which is fairly close to your credit score. It's got a ton of different things. I'll link a video that goes over that more in depth because it does make a huge difference on your cost. You can pull your accident history, your claims history, your tickets and violations history. Depending on the state that you're in, find out, am I a 3-year or a 5-year state? If you're what's called a 3-year state, that means all claims, tickets, and accidents, they don't disappear, but they fall off of your record of insurance. If you're in a 5-year state, then it's 5 years for claims, tickets, accidents. Those disappear essentially and no longer rate against you. If you're at 4 years, don't worry about it. 9 times out of 10, the insurance company isn't necessarily thinking about that part. They rate them less and less the older that they get in most cases. Knowing that insurance can't bargain, it's not a thing that you can say, well, this guy gave me this, can you match it? It's impossible. It's one, not legal, at least them doing it ethically. There's ways they can trick you. The only thing that you can really focus on is what can you control. And those are knowing the discount. Sometimes when you're older, having an AARP membership can make a difference. So before you buy the membership, understand what that means, what it does. There's a Good Sam membership. When you're 35 or older, you can technically purchase at 20 some odd dollars a year, and it might save you $50 to $100 on your insurance. So kind of knowing the clubs and the groups and the pieces to join are good. The one thing I personally stay away from is the dealerships do offer car insurance, and they're starting to do that more often, but they're not really doing anything with it. Most of your dealerships are outsourcing it to other companies. Those other companies are doing exactly what the link below does, is they're just connecting you with an agent or an agency that usually works with multiple companies, sometimes not. So if they do, great, and you want to find a new agent there, the problem that you're going to run into is you're not going to get a specific agent that will stay with you long term. Those are more sales centers. They still can shop you across multiple companies, so you could do that. They're affiliated with the company that is the dealership, so let's just use Mercedes or Honda, for example. If they have a honda.insurance.com website and they offer discounted insurance, that might be an agent that's fine. They can probably shop you around a couple companies and whoever they're contracted with, but they don't stay with you long term. That's not the person that's you're gonna call when you have an accident. That's not the same guy or gal that you're gonna work with a year from now, 5 years from now. If the rate goes crazy, you can call them back and they'll reshop it. That's fine. If you want that impersonal touch without that specifically knowing your account and your advice, that's fine. That's a perfect spot to go, just not the best fit for everybody. So what are your thoughts? Do you think the auto industry the next 2 to 3 years is going to tank? Can the insurance companies slow down with their rate increases where they're no longer 20, 30, sometimes 50% higher, where that can affect the auto industry in general? Again, if you are looking to understand the policy that's going to give you the best foot forward to know what coverages you should carry, here's a link to a video that will go over in depth the 101 on what coverages you should carry. If you're just saying, hey, I got to get those discounts in, what are those little extra ones you were talking about? I don't want to call and talk to those guys yet. Here's my discount 101 video as well. I'm Mark with Think Insurance. I'll see you in the next one.